Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 14th, 2022. And the bull market started yesterday. Yes, I believe that there's ample evidence to assert that the Bitcoin and largely, cryptocurrency market, because we track Bitcoin as a proxy for the cryptocurrency market at large, although there are certain assets that did start their bull market in June, okay, as early as June, that the cryptocurrency market at large and Bitcoin in particular started its bull market yesterday, October 13th, 2022, okay? And I understand that that is not that popular of an assertion, given that it's the bottom, obviously, very few people are going to make that assertion. But we've been tracking this every day. We've been looking at multiple factors, and I think that this is very, very, very likely. And we're going to talk about why that is. Yesterday I talked about bottom signals, but today I'm going to get even more specific in saying that the actual bull market for Bitcoin started, and it's up only price action, it's up only season, it's alt season. We're going to look at Bitcoin dominance. We're going to look at the DXY, the US dollar currency index, the inverse correlate to Bitcoin's price action. We're going to look at other altcoins and whatever else you guys want to look at. So if that interests you, then keep tuned in. Hope you're having a great Friday. It's a beautiful Friday here in the DC suburbs. All right, let's get on with it. All right, let's start by looking at Bitcoin, shall we? Bitcoin put this move in yesterday, okay? And when we talk about the bull market, we're talking about impulsive price action, up only price action. We're talking about 5 waves up, 3 waves down, 5 waves up, 3 waves down for months and months on end. This very well may be the first of such 5-wave moves to the upside, okay? This is my assertion. Yesterday, and this is a small time frame, 15-minute time frame, so we can really see what I'm talking about here, okay? And putting this in context, it's always important to put it in context, so let's go to our daily time frame, our larger time frame. We've been in this really big, this large trading range, right, for 100 plus days, 117 days, okay? 117 days, we're putting in all these corrective moves, right? Corrective price action, just consolidation patterns. It's essentially a sideways market for 100 plus days. Hard to read, but, you can try and read, 2 degrees of AB basings and a pivot. That's what I'm reading, okay? I'm reading that this is 1 degree of AB basing. This is 2 degrees right here. Okay, sorry, this is the first degree, rather. This is the second degree, right here. And then this is your pivot. Okay, that is it. 2 degrees of AB basing and a pivot. Okay. Do we always have a pivot? I don't know. I'm still working on whether the pivot is a must. Sometimes, like for instance in Cardano, I don't know if I perceive a pivot. There may be one there, but I don't know that I perceive one. I'm just going to give a quick example. So this is my big A. This is my big B. This is my small A. This is my small B. Yeah, okay, there we go. Pivot. Okay, that's a massive pivot though. And I don't know that that's a pivot. You know why? This can't be a pivot. You know why? Because if this is and this is what I thought before, that if this is a pivot, then this is more than, this retraced way more than it could possibly have retraced. Because if you take the phi ratio of this A wave, you can see, and this is part of the reason I had trouble with my trades here, like this should have been, if this was a pivot and this was an A wave, right? And this was a kind of a subsequent B wave, you should have stopped at the phi ratio. It should have stopped at this level. right? That should have been the maximum retracement, but it wasn't, which leads me to believe that this right here, so this was small a, and all of this was small b, okay? Whoops. All of this was small b. So this is the counter to this. So when we're talking about corrective waves, always 3 or flavors of 3, okay? 3 waves up, 3 waves down, or 3 waves down, 3 waves up, right? And then you pair them together. And 2 such pairings make a complete consolidation reversal, okay? So that's the A-B basing sort of theory in Elliott wave theory, partly based off of Ralph Nelson Elliott's work, based off of my own research. And then typically after that, you get some sort of pivot, okay? I don't see a pivot here, and there may be a small pivot, small time frame pivot, but alas, on the high time frames, I just see 2 degrees of A-B basing. This is why I like to state I'm looking for 2 degrees of A-B basing on a certain time frame for a complete consolidation reversal pattern. Back to Bitcoin. So that's a high time frame read, okay? I see those 2 degrees of A-B basing, and I see what could be construed as a pivot, okay? You can also say that right here, you can also say that this is an entire B wave right here, okay? Where it's you're dealing with a zigzag, it's a 5-3-5 situation, okay? I don't know. In any case, let's just say that there's 2 degrees of A-B basing on the high time frames. This is what we should concern ourselves with. Pivot or no pivot, 2 degrees of A-B basing on the high time frames in this big consolidation pattern, okay? In this big range, okay? So that's the kind of Elliott wave look of it, okay? And the other thing is, just based off of simple support and resistance, you've held a certain range for these 100 plus days, and you've respected the lows and you've respected the highs. So if this is a consolidation reversal and you're getting a good response at the lows, do you expect a move up? Okay? So that is just, for if you were pessimistic on the bear market being over and the bull market starting, at the very least, you should look at that being evident enough to say, okay, at the very least, it's likely that we move up to the top, back to the range highs of this 117-day range pattern, right? That would be just like, I don't know what's going to happen after that, but it looks as if we're testing the tops of these ranges, okay? Now, why are we saying that the bear market's over? Why are we saying that this range of 117 days is it, right? One of the reasons, just looking at staying on Bitcoin's chart, right, is that if you go on even higher time frames, you get 5 waves up and 3 waves down. You get 5 waves up and 3 waves down. And if you measure that, we know that these 5 waves up and 3 waves down in a wave 1-2 scenario typically target between the 382 and the 618, right? So we're in the range. We're in the region where wave 2 would be reversed, okay? More specifically, if you go on a smaller time frame, let's say the weekly time frame, and you just focus in on the correction, okay? This ABC correction right here, you get interesting mathematical relationships, okay? So taking this A wave, retracement of this B wave, you get a target of 1618 for this ABC, right? Typically, we know that the C wave, okay, the impulsive wave of an ABC flat correction targets the 1 to 1236 level, okay? But then on an extended, right, sometimes the C wave is extended, that 1618 is targeted, okay? That's what's targeted for this flat correction. Now, The other thing you can do is just look at this impulse right here. And this is very tricky for most people. They don't see this as being, it doesn't make sense, right? So how does this make sense? How does it make sense mathematically? How does it make sense in terms of Elliott wave theory? If you try to count 5 waves here, you're not going to be able to do it. Once again, if you try to count 5 waves here, you're not going to be able to do it. What you're seeing here and what volume will corroborate, if you turn on your volume profile, you'll see you have volume spikes here, here, and here. The only way this makes sense is if this was a double zigzag, and this is something that exists. This is also an impulse. It's not a 5-wave impulse, but it's a WXY, and then an intervening X, and then a WXY. Okay, so WXY, X2, WXY. Okay, so it's essentially a WXY double zigzag. It's a complex correction. Look it up if you're not sure, if you've never seen it. Before this printed in the markets, not just on Bitcoin, but throughout the cryptocurrency markets, I was not familiar with this particular impulsive pattern. Okay, now I am. And any Elliottian that's in this market should now very well be acquainted, in crypto, very well should be acquainted with double zigzags. This is quintessentially a double zigzag, okay? And what's very interesting about this is if you measure it using your Fibonacci extension tool, this initial zigzag, right, taken to the nominal low, let's take the nominal high and orthodox high right here, gives you exactly what you would expect. WXY, Y targets between the 1 and the 1, 2, 3, 6 Fibonacci extension, right? Boom. There you go. So a lot of things really point to this correction being over in the macro, okay? Just looking at Bitcoin. Now, I will be the first to concede that it's just probabilistic. So the way you want to do your analysis to make, very big assertions and put money behind, the idea that this is the bottom of the bear market and the bull market has started in this candle right here. What you want to do is layer your reasoning, layer your proofs, layer your analysis rather, right? You're looking at the Bitcoin chart. There are certain things that indicate a certain thesis may be correct. So what you want to do is move on and see, okay, what else supports this, okay? And without even looking at the rest of the cryptocurrency market, right? Because you can look at, what Cardano's doing, you can look at what Polkadot's doing, you can look throughout the cryptocurrency market and get an idea, okay, that looks like it makes sense. Let's go to the asset or the market that we believe, given our understanding, given our analysis, right, really moves the market mover. I've talked about this ad nauseum on the channel. This is the DXY. Okay, I'm going to show you this chart once more. And this is essentially showing 8 years worth of data proving that Bitcoin and the DXY, US dollar currency index, are inversely related. Okay, almost perfectly so. Okay, you can see that right here. Pause it if you want, but this is a chart I made up using every bar as a month. So it's a monthly chart, and there's about 8 years of data on this chart. Now, given that assertion, we can look at the DXY and actually say, when this starts going down, we can expect Bitcoin to go up. Okay, and so the DXY has been really tricky, but we can read it. Okay, the DXY has been really tricky, but we can read it. And again, mind you, this analysis thus far has not gone in any type of indicator, whatever. We're just looking at price action. We're going to have a look at indicators in just a second. We're going to look at bullish divergences on the weekly and the daily time frames, which are telling. Now, those don't always play out, but they're telling when they do. Let's go on the daily time frame here. And as you can see, we hit a high with the DXY at this point right here, okay? We rejected, okay? We came back up, and again, this is consolidation reversal that you're seeing. You hit a high. Let's actually go on a smaller time frame. Let's go on the 4-hourly time frame. Guys, if you're getting value, please like, share, and subscribe. You hit a high over here in September, late September, and you hit essentially a flat correction, or I don't know if it's flat or a zigzag, but a corrective move, which corrected your initial break of structure, corrected out, okay? Has to be some sort of flat correction. Why? Because the subsequent counter broke the 618, the 0.5 or 618, the golden pocket, so the 618 of this A wave, this initial break of structure. So just proving that to yourselves, take your Fibonacci retracement tool from the orthodox top of that to the bottom of this, and you can see you're already in that 786 and above region for retracement, which tells you that this is a flat correction that's being formed. Okay, so you have 3 waves here, you have 3 waves here, and what you're getting here is a pivot. So now let's zoom into that pivot, okay? And that pivot has an anatomy of its own, which is interesting, okay? And I've marked it up. Hopefully it's not too confusing. So let's go down on the smaller, even smaller time frames to really see what we're doing here. Okay, let me clear this up first, just to not make it too confusing. Okay, let's hide these, because I just want now, before I get into the particulars of A/B basing right here, because you can look at A/B basing, you know, both on the top or on the bottom. It doesn't matter. It's a consolidation reversal, right? It works on both ends. So what you can see here looks to be some sort of rounded top, right? A rounded top, a consolidation of sorts. This is clearly your initial break of structure. This 3-wave move is like the counter to this. Do you see what I mean? Do you see this 3-wave move? Like when you do Elliott wave enough and you look at corrective moves enough, your eyes start to target these patterns, okay? These flat corrections, right? And you can see one such flat correction here. It's clearly a 3-3-5. Do you see that? So if you see this, you know that there is a wave, a corrective wave, and this is the counter. So that's one pair. That's 1 degree of A/B basing. Do you see how that works? And then this right here has to be the second. So another A wave, another break of structure, okay? And that break of structure is essentially breaking the idea that this price or this trend is going to continue to the upside. It's basically a rejection, right? So these rejections happen once in the initial wave, counter wave, happen twice, okay? And then third time's a charm. That's why you talk about pitchfork reversals, right? Or head and shoulders patterns. That's how you get those, right? You can break them down using Elliott waves. That's the beauty of counting corrective waves in Elliott wave theory. I know a lot of people think Elliott waves relegated to just counting impulsive waves. That's also well and good. But actually the most useful part of Elliott wave theory is this. It's messy. It's not easy, but it's very helpful. And this is what we're doing here. So, like I said, this is your initial break. This is your counter. This is your secondary break. This is your counter. Now, what do we have here? It looks like a pivot, okay? And that's what I'm talking about. Sometimes you see a pivot, sometimes you don't. There's a pivot right there, okay? So I'm going to put that all in using the waves that I drew up, right? The 2 degrees of A/B basing. So let's make that visible. Okay, and what you can see here is I've got the first degree in yellow and the second degree in in violet. Okay, so the first degree, like I showed, this is my first degree right here, and this is my second degree. Okay, and then now let's just focus on the pivot. So let's go even smaller time frame, and what you can see is this is once more an A wave, a B wave, okay, and now I think you're getting an ultimate rejection if this impulse to the upside is finished, okay? You may get one more leg up, it's okay. And again, any initial break of structure, if this is indeed a counter wave, the counter can only go, the counter can only go to as high as the phi ratio of that initial break of structure. So this would be the cap right here, the 1618, right? If this count is correct, right here. But this is what I'm seeing. This is how I'm counting it. And now this may be incorrect, but like I say with counting corrective waves, it's not a... You don't want to get lost in being absolute, right? Like, you don't have to absolutely get 100% of the move in 100% correct. Like, you want to try your best at counting it just to get an understanding as to what's happening. You may be counting a wave 4 correction and get fooled, and there may be one more impulse, right? And that's okay too, but just try. In my experience, you're trying. That's one way of trying to understand what's going on in a market. This is the best way. And it's tough and it's challenging because there's so many permutations and combinations that corrective waves can take. It doesn't mean you shouldn't try. So this is my best effort at making sense of what's happening in the DXY. And we know it's important to know what happens in the DXY because it's almost perfectly inversely correlated, at least on a high time frame, to Bitcoin and the rest of the cryptocurrency market. Now, back to Bitcoin and crypto. On the smaller time frames, actually, let's stay on the weekly time frame for the moment. I want to show you one thing, okay? Let's get rid of the volume indicator. We don't need that. And let's put in our stochastic RSI. My favorite momentum indicator. Okay, so the stochastic RSI right now on the weekly time frame is crossing bullish in what seems to be some sort of bullish pennant. Okay, right here. Do you see that? It's a bullish pennant crossing bullish. It's about to break this resistance right here. Do you understand what I'm trying to show? I drew it out. Hopefully that makes sense. Okay, that's the weekly time frame. Okay, and obviously you can see very clearly you're seeing bullish divergence on the weekly time frame. Now, these divergences don't always play out when you think they're going to play out. So it's not 100%. I don't think anything is, but this is a good indication as to what's potentially happening. Yeah. So if you take an arrow of price action, you can see that from here to here, you're clearly making lower lows in the market, right? But then on the weekly time frame, in the stochastic RSI momentum indicator, you're making a higher. This is bullish divergence on the weekly time frame. You seldom, if ever, get bullish divergence on the weekly time frame. It's not something you see every day, right? I don't see this in Cardano. I see Polkadot. I don't see this in Polkadot. Like, you seldom, if ever, see this in the market. I don't even see it in Ethereum. Do you understand what I'm saying? Like, you do not see this. Here, we do see it in Veracity, yeah? You see a cross here. You just don't see it often. You see? I'm just going down my watch list. I don't see bullish crosses showing indicating bullish divergence here. You're about to get across in Litecoin. Litecoin's, but it's not divergent here in Litecoin. It's not. There's no divergence. It's bullish, but it's not divergent, right? Kadena, it's not yet crossed. Dogecoin is showing strong bullish divergence on the weekly time frame. Okay, again, you don't see this every day. Dogecoin and Bitcoin are the only ones thus far on my chart that are confirmed. Let's see, XRP. No. XRP, let's see. XRP did. So XRP already showed that. Okay, do you see that right here? And it played out. Right here. So XRP showed strong bullish divergence. Right here. Excuse me. So that was played out here, and you can see that played out, and it'll most likely continue to play out. Because right, what you see here is a consolidation, not a reversal pattern. It's a consolidation for continuation, not a consolidation reversal. So XRP played out its weekly bullish divergence, and it's been up. It's one of those assets that has been in a bull market since September. Okay. Most assets have not been in their bull run. They have not been positively impulsive since September. Okay, most of them only just started yesterday. Not all of them, but most of them. Okay, so this is what I'm looking at. Okay, so that's one thing. Strong bullish divergence on the weekly time frame. Now let's go to the daily time frame. So these are all, once again, to make the bullish case, to make the bearish case, you want to get evidence, you want to get a number of factors and add them and make a case, right? That's how I work, that's how I do it. Like, I'm not going to go off of one indication or one thing because there's nothing, hey, nice hash, there's nothing really that I'm confident enough to say, okay, if that happens, then okay, maybe the only thing that I would say, if I had to choose one, it would be what the DXY is doing. But then again, it's also, even though the DXY is bearish and it's been at resistance for quite some time, that's not necessarily going to tell you exactly what Bitcoin's going to do on the small time frames, right? The DXY has been bearish from here and rejecting from here and putting in corrective price action from here, okay? It's the DXY's ceased being bullish in September, late September, okay, when you first got some assets in their bull markets, but still you had some assets in crypto experience all kinds of volatility to the downside, even though they didn't break major support. This is not the only thing I would go off of, right? Especially if I'm making a leveraged trade. So back to the indications that tell us that Bitcoin's bull market started yesterday, October 13th. Going to the daily time frame, what do you see? You see a complete bottoming of the stochastic RSI, the momentum indicator, and you see a bullish cross, okay, and a double bottoming, okay. So this is what's most important. So you had a bottoming over here, okay, in September, right, and you had a bullish cross, but still you didn't get much. Right now we have a double bottoming, okay, and typically your bottoms are characterized by double or triple bottoms. I don't know why, it just is. I'm sure there's some math behind that, some theory behind that. I don't know why. But that's usually what you get on proper bottoms, okay? So that's what I want to show for why I'm very, 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 very confident that this will continue, right? I'm looking at my Elliott wave corrective price action. I'm looking at my indicators. I'm looking at the DXY. All of those things in concert lead me to be very confident in my trades to the upside. Okay? Now, on the smaller time frame, and I showed this to start the video, you can see very, very simply 5 waves up, 3 waves down between the 382 and the 618 of the prevailing 5 waves. And you should get some sort of rounded bottom, some sort of consolidation reversal, and continuation. Once you start seeing that in the market, 5 waves up, 3 waves down between 0.382 and 618, that's your confirmation, okay? So we can go throughout the market and observe this. I'm going to turn the magnet back on. So these are the 5 waves up, okay? And what you can see is you get 3 waves down. 1, 2, 3, okay? Between, once again, the 382 and the 618 Fibonacci retracement. And then a continuation. This is confirmation. Do you understand? If we start moving up from here, this is confirmation of a bull market, which is essentially impulsive, corrective, impulsive, corrective, impulsive, corrective, and you keep going. You just keep going for months and months and months on end, okay? And if Bitcoin just entered its bull market yesterday, October 13, 2022, then that means most other assets have also done so, okay? Let's look and see. What do you see in Cardano? 5 waves up, 3 waves down between 382 and 618. Consolidation reversal should take you and continue this trend. You should continue this trend. If this reversal occurs anywhere within this region, this is confirmation. You understand? Confirmation of the bull run having started for Cardano, right? Again, you can go throughout the market, whatever asset you want. Count 5 waves up, 1, 2, 3 waves down. If you get reversal, continuation, this is confirmation of a bull run. That's the definition of a bull run. Until today, so let's zoom out. We're in Polkadot right now, yeah? So let's zoom out on the daily time frame. And I really want to drive this point home. You have not, and I repeat, you have not seen any instances of, within this range, last 150, 160 days, you have not seen any instances of 5 waves up, 3 waves down, and then 5 waves up, 3 waves, like you haven't seen that. Nor have you seen 5 waves down, 3 waves up, 5 waves down, 3 waves up. That's impulsive price action. Last time you saw impulsive price action was 160 days ago to the downside, okay? Now, what I'm alleging is that you're starting a new trend that's impulsive, and you have not been in impulsive price action. All you've done is experience corrective price action. 3 waves here, 3 waves there, 3 waves here, 3 waves there. You're starting to get into the 5-wave territory. This is a pivot, by the way. 5-wave territory. Very clearly pivot in Polkadot right here. Okay? So 2 degrees of AB basing and a pivot. Now you should get 5 waves up and then 3 waves down. 5 waves up, 3 waves down. 5 waves up, 3 waves down. Ad infinitum. Or not ad infinitum, but until you reach your bull market targets. Does that make sense? Again, prove it to yourselves. Go through the market. Go on the smaller time frames. And you can see it in pretty much every asset. Not every asset. I'm going to show you one exception on my watch list. But pretty much every asset that you can find will give you that 5 waves up, 3 waves down between 382 and 618. Okay? And if you're not hitting the 382, that means that 5 waves up pattern is not yet finished. Okay? So Ethereum, haven't hit the 382. Okay? What does that mean? That means it's still going. Let's see. Did I pull this properly? I could either pull it from here or from here. I'm not exactly sure. But either way, you're not hitting the minimum for these 3 waves to be completely corrective of these 5 waves. So you're not finished. That's bullish. You're basically saying whatever this is an intra-wave correction because the minimum 382 retracement hasn't been hit yet. Either this continues down, or if it continues up, that basically means it's a continuation of that impulse to the upside for Ethereum. Okay, reserve rights is one of those assets that has not yet put in an impulsive wave. And how do we know that? We can see that this seems to be at least a corrective wave. 3 waves up, 3 waves down, and we know that particularly because if we pull our Fibonacci retracement of this entire move, let's see. I'd say this is the top of it. You can see that you're well in the flat correction zone, okay? You've breached the 0.618, a phi ratio, so there's nothing impulsive about that. Once you breach that 0.618, you're no longer impulsive, you're corrective. And here you're in 786,914 territory. That's high likelihood of a flat correction. So 3 waves, look to follow it up 5 waves because the trend of this flat correction is established like this. 1, 2, 3. That's the trend is going up. 1, 2, 3. That's counter. So this is the initial break of structure. This is your counter wave. Follow it up with a 5-wave impulse. This should be the start of the bull market for this particular asset, RSR reserve rights. Okay, so this is the exception that I've seen on my watch list that indicates that this impulsive price action has not yet started. Otherwise, you can see once again 5 waves up, 3 waves down between 382 and 618. Right, synthetics, VRA, same thing. Zilica, same thing. Ravane, still corrective. Perhaps. Let's see. Yeah, it looks still corrective. This may be the start of this Ravane chart. I usually skip it because it's very volatile. It's harder to read. It's not very clear. But in any case, just for the purposes of this analysis, I'm seeing that you're probably getting some impulsive price action here and a retracement of that 5-wave sequence right there. Yeah, you've hit the minimum 382. So it's possible, okay? Kadena, also 5 waves up, 3 waves down. You can see that. Litecoin, same thing. 5 waves up, 3 waves down. You're finding support at this level. If you continue, you confirm this trend that was established yesterday, October 13th, when I allege that Bitcoin's bull market started, okay? Dogecoin, you see the same thing. Dodo, you see the same thing. XRP, as I said before, had already started its bull market in September, but you see the same thing, okay? So that is my take on the market, and those are the reasons why. Guys, please let me know what you think about that, okay? What do you think about the DXY? Do you think the DXY is going to continue to go up? Or do you think it's finally meeting its resistance and it's pivoting on the way down? Yesterday, when I looked at this, so yesterday was the 13th. And we were in this move. And I thought this move was going to continue, okay? I didn't know that the pivot was going to be like this. And I'm like, okay, this is it. But we pivoted, okay? And again, it's wrong left and right, in reading the minutia of these corrective waves. But by and large, what you want to do is get a handle on what's likely happening, okay? Oh, you missed a pivot. Not the end of the world as long as you have the major trend, the overarching trend kind of to a high degree of probability read correctly, okay? And that will help you in your analysis. The last thing I want to look at before we part is the dominance, Bitcoin dominance, okay? So Bitcoin dominance, I've been saying, here, let's go to it really quickly. Let's go on a high time frame. Daily. Guys, if you're getting value, please like, share, and subscribe. So Bitcoin dominance, I've been saying, is likely to go to these levels right here. Back to the top here. And I thought this was a triple three. So I was reading this as a WXYXZ, okay? And what am I talking about when I say this? I'm talking about this range right here, okay? We've been in a range with Bitcoin dominance for a while now. And if we measure this range, it's about 500 days, okay? So for 500 days, we've been going up and down in Bitcoin dominance. And the range high is about 48%. The range low is about 40%, okay? And I've been saying that it's likely that we break down from this range, okay? So, although Bitcoin and alts are at the bottom and are likely, so you're coming into this range from the bottom. Just like when you're looking at Bitcoin's price action, you come from a drawdown and then you go into a consolidation. I'm alleging that this is a consolidative, continuative move, meaning it's not a consolidation reversal where Bitcoin dominance is all of a sudden going to go up and Bitcoin is going to outperform all the altcoins. No. I'm saying that it's going to eventually break down on a higher time frame, okay? And there are a lot of reasons for that, and really quickly, two of the main ones is that I can see a nice Elliott wave impulse here, okay? Basically a 1, 2, 3, 4, 5 impulse, and then we're basically just stuck. We've been stuck in a complex wave 4 correction, which wave 4 tends to be a complex correction, especially when you have a relatively simple wave 2 correction. The other large time frame reason that that this is my thesis for Bitcoin dominance on a high time frame is that you're in a nasty head and shoulders pattern, okay? And a head and shoulders pattern we know is a bearish pattern. And it's confirmed once you break the neckline of this and you retest it for a move down. And I believe that's what's happening here, okay? And the other days I was saying that this was, so now let's focus on this region right there. So let's go back to the small time frames, 4 hourly time frame, okay? So I was saying that it's likely that we're in some sort of WXYXC. One second. What happened to our music? One second. Let me figure this out. All right. Okay. So, sorry. Bitcoin dominance, yeah. So Bitcoin dominance. I was saying it was a WXYXZ. I no longer think it's a WXYXZ because daily time frame. Zoom in on this. This to me doesn't seem, if this was a WXYXZ and this was the Z wave, and remember, every last wave of any corrective sequence is impulsive. This would have to be the base or the beginnings of an impulsive wave. And I've been looking at this for quite some time. I don't think that's the case. This does not look like a 1 wave, a 2 wave sequence, and then you're going up for wave 3. It just doesn't, okay? And then my indicators, right? If I'm turning on my my stochastic RSI, I know we're kind of crossed bullish, but I don't think that even though the daily's crossed bullish, we're going to go up even more. I think the 4 hourly time frame is really showing you what's going on here. It's your cross bearish and you're headed down. The hourly is completely oversold, so it's hard to tell with especially in corrective price action and in complex corrections. It's hard to tell with the indicators, but my read on it and my hunch, based off of looking at this sequence for long enough, is that this is a double three, a simple WXY. Okay, and here's my read on it, my reread. Okay, I think that these three waves are my W wave. This this composed flat correction is my X wave, my intermediate wave. And then my Y wave, my impulse, was like this, was like so. I think you got a pivot, and then my impulse was right here. Okay? So basically you did a W, X, pivot into impulse. Okay? Now this pivot just so happened to be a zigzag, but you could have gotten a pivot like this, which would confuse, would have confused me less, given that it kind of stood there at the 0618 of this preceding uptrend. It confused me, and I thought this was all one thing. So I was like, no, that looks corrective, but this to me looks like a pivot. Then you get your 5 waves. That's the end. So again, W, X, Y. Right there, that was the end of that complex correction. And so from there on out, you're getting a resumption of impulsive price action. And that to me looks right, because if you look at this and compare it with anything that you're getting here that you've gotten for the past 400 days, it doesn't look anything like it. This definitely does look impulsive, whereas all of this looks corrective, right? And again, I think one of the biggest points is just looking at it objectively. You've broken a plane here. I know you've gone low, but you've gone lower here. You made lower lows in this. So this is the impulse making lower lows, and all this is that we're experiencing right now is a counter, right? So if this is impulsive price action, and there's somewhere in here, maybe this is 5 waves. I don't even know what this is. Like, we're on the daily time frame. Let's go on the 4-hourly time frame. Let's try to see if we can't make sense of this, guys. And you guys appreciate level of detail that you're getting in this analysis, this Bitcoin crypto analysis, looking at Bitcoin dominance, looking at DXY, looking at different altcoins, and going into the minutia of the Elliott wave theory. Not just saying 5 waves up, just going into minutia. Then guys, definitely like the stream, show some love. Not getting any money. I turn down almost daily sponsorships because this channel is just educational. Like, I plan to make my money in the market, and strictly in the market, not selling sponsorships, so you guys aren't getting reads about use this exchange, that exchange. I don't care about that. Like, I do this because I genuinely appreciate price action. I love looking at charts. I love an analysis, and I hope that comes through. Okay, so when I'm looking at this, this is a heinous impulsive wave. But I think this is an impulsive wave. Is this an intra-wave correction for continuation? I don't know. I'm gonna try and see if we can get volume here. Volume's not telling me that this is finished right here. Okay? Based off of what volume's telling us, this is intra-wave. Do you guys see what I'm saying there? Like, volume would tell you, a volume spike usually shows capitulation, shows the end of a trend. I don't see anything like that here, okay? So, just using my volume indicator, I feel like it's likely, more likely than not, that whatever you see here, this is just an intra-wave correction right here. Maybe this is some sort of wave 4 correction or something. I don't know. Okay. And yeah, some sort of wave 4 correction. And what you got is, once again, some sort of WXY, and this is a pivot of some sort for continuation of this trend. So, although I said before, I expect Bitcoin dominance to come back to this level to 48 before continuing, given what we're seeing in the market now, that Bitcoin's bottomed and Bitcoin's looking to start its bull run and most altcoins are starting to make their bull run, this makes sense. Why does it make sense? It's because, remember, when Bitcoin goes down, altcoins also go down, but much more. When Bitcoin goes up, altcoins also go up, but much more. That's what we call alt seasons. So again, if Bitcoin's going to go up, and it's going to go up now, it would make sense that its Bitcoin dominance is ready to go down. That this is major resistance, and it looks like it, doesn't it, right? It looks like what you're forming here is an ascending barrier triangle, okay? Remember, in Elliott wave theory, we have two types of triangles, okay? Converging or diverging triangles. So triangles that come together at the apex and triangles that move apart at the apex, okay? So this is a converging triangle, okay? And then in converging triangles, you have your barrier triangles. A barrier is basically a straight bottom, or you can have a straight top, okay? And then or you can have kind of this, I don't know what you would call that. I forget the terminology. But a regular triangle where there's not a straight edge. But this to me looks like a barrier triangle where the top is relatively flat and the bottom is ascending, okay? That to me is a corrective pattern where you're kind of butting your head up at resistance, and it doesn't look like you're going to break that resistance. What it looks like, what looks like is it's happening, or what it looks like is you're going to reject off of this and break this ascending wedge down, right? Most times ascending wedges do break down. So again, probability is on our side, and that would coincide with the beginning of this larger move in Bitcoin dominance, which heralds the bull run of 2022, showing Bitcoin going up, but alts going up faster at a larger rate than Bitcoin, and that's what you expect in a bull market, yeah? So for people who are waiting for a bull market and expect Bitcoin dominance to go up, those two things are contradictory, because there's no such thing as a bull market, a proper bull market where Bitcoin dominance is going up. Bitcoin dominance goes up when Bitcoin's falling, or when, Bitcoin's being corrective, right? And altcoins lose against Bitcoin, okay? So here, let's see. Let's go back on the smaller time frames. And again, what you're getting here is exactly what you should expect. Just in terms of support and resistance, this is a resistance, right? Or it was support, rather. This was support. You broke down, and then you broke through. And now you retest it as support, okay? You're retesting old resistance that you broke through as support before continuation, okay? But you do need to turn around here and continue upwards. That is going to be confirmation of this analysis, yeah? You do need that turnaround right there, right? Reserve rights, we know, is in its own kind of category. It's in a corrective wave, okay? But for most everything else that we looked at, you're correcting in the range of a wave 2 correction, yeah? So that's what you're expecting right here. And that most people will wake up to, oh, okay, I see 5 waves up, 3 waves down. At least, most people that understand Elliott wave theory. Then they see another 5 waves, which is going to be wave 3, which is going to be the longest, the most impulsive. Then they're going to be like, oh, okay. There may be something to this bull run, okay? MB says, what's your take on XLM BTC, Binance, and Dash BTC, Poloniex, Doge BTC, 80 BTC broke out before the other alt pairs. Surprisingly, ETH Classic has shown strength compared to Bitcoin. No, there's nothing surprising about that, MB, because ETH Classic is an altcoin. Most altcoins, pretty much, I don't know an altcoin that's not going to beat Bitcoin in the bull run. Barring any fundamental issues. That's what it's supposed to do. Bitcoin, people don't invest in it because it's going to give them the most returns. People invest in Bitcoin for safety. People invest in Bitcoin for security, right? Because it's not going to rug tomorrow. That's why countries invest in Bitcoin, not some random shitcoin, right? Or some random altcoin that's just been minted and who knows what will be of it in the coming months. So let's have a look at what MB's talking about. Then we'll call it a stream. So XLM BTC Binance chart. Let's see. Let's open these. XLM BTC. Okay, what else did he say? He also said, or she, I don't know. I always assume he in crypto, right? Dash BTC. Poloniex, she said. Doge BTC, ADA BTC. Probably ETH Classic. Okay, let's just look at ETH Classic. BTC. Okay, so let's look at those three. Let's go on the high time frame. So this is Stellar Lumen's Bitcoin. Okay, so this is a case where I'm looking at what happened here, and Stellar Lumen's XLM has been gaining against Bitcoin since May, okay? And May, we know, was when Bitcoin put in its orthodox, or most altcoins, rather, put in its orthodox low. But what I'm seeing here is this looks corrective to me. 2 reasons. One, you're barely holding that 618, although you may hold that 618, but most importantly, waves of the same degree are comparable in time and in price. If this is a 5-wave impulse, this 3-wave impulse has spent way too long. That can't be impulsive. That has to be corrective. And that's another point here that we can make, and I didn't mention, but just look at this right here. Look at this. Waves of the same degree are comparable in time and in price. I know people say equal in time and in price, but look at this. Took you about 12 hours to go up with those 5 waves, right? How long did it take you to go down? About 14 hours. Waves of the same degree are about equal or comparable in time and in price. When you're looking at this, everything says this is an impulsive wave. Everything fits, right? And you can do that same analysis throughout the market. 12 hours up, 12 hours down, or, thereabouts. 12 hours up, 12 hours down, 12 hours up, 12 hours down. Now here, you violated the price, right? And I already talked about why RSR is not impulsive, or it has not yet entered its impulsive price action, because you violated that 0.618 phi ratio. But otherwise, in all these other assets, you've hit the mark, right? If you get a reversal right now. And then, quick look back at our US dollar currency index. There's nothing impulsive, there's nothing bullish about this. It's struggling, okay? At some point in time, it will reject, which will result in massive gains to the upside for Bitcoin and the rest of the cryptocurrency market. Okay, back to what we were talking about. Sorry for the segue. Just, I didn't talk about that, and I thought that was interesting. All right, back to stellar lumens. So for me, I was on the daily. Yeah. So for me, this is not right here an impulsive move. This is a corrective move. You could argue that this is impulsive and this is kind of a corrective move that is equal in time and in price, right? So you could say that's wave 1, wave 2, and you can make an argument that this is a wave 3 and wave 4. But if this is a wave 3, wave 4, you're putting in a leading diagonal, okay? With basically wave 1 and 3 being almost the same length, right? That would be, wave 3 is what you would call concerted, because typically wave 3 goes to a minimum of the 1618, so 161.8% of wave 1. But in this case, it looks like wave 3 is about 100% of wave 1. And when you have that case, what you're going to get is an explosion in wave 5. You're going to get, if that is correct, if that read is correct, what you're likely to get in XLM and BTC any moment now, actually, is wave 1 through 3, retracement of wave 4, orthodox low of wave 4 right there. What you should get is a minimum extension of wave 5 all the way up here to the 1618. It could be higher, but minimally there. And that would make sense to me given this inverse head and shoulders that I'm seeing right here. Okay? Again, you use your Elliott wave, you use your pattern analysis, you use whatever skills you have, bring to bear in the market, on these charts, and it shouldn't, I don't think that you should, when you're learning, try to learn everything. Just focus in on one thing, whatever interests you, deep dive into it, become really proficient in it, and you can learn some other things on the side, but at the end of the day, those things should all tell you the same thing. If your analysis is correct, your pattern analysis shouldn't be telling you one thing and then your Elliott wave telling you another thing. They should be saying the same shit. And here in this case, we're reading a leading diagonal in XLN BTC, and our pattern analysis is also showing a target of the phi ratio right here, which is approximately the height of the head to the neckline in XLM BTC. Okay, so this looks bullish, and a confirmation of that is obviously a breaking of this, which is likely to happen given our Elliott wave analysis. Okay, so that's XLM BTC. Dash BTC, say again, this to me, there's nothing impulsive about this because you went up, but then you corrected in such a way that there's no way that this is a wave 1, wave 2 situation. This is definitely an A-B situation, or initial break of structure and a counter wave, even though that counter wave is a zigzag, okay? So what you're seeing on Dash is a 5 waves up, 3 waves down. Expect a 5 waves up situation, okay? That would be a 5-3-5 zigzag for Dash, okay? Ethereum Classic BTC. Now this is impulsive price action. This is a 5-wave move. This is like, I don't know if you can get a clearer. This is textbook. Wave 1, wave 2, wave 3, wave 4, wave 5. Like, you should be able to read this at any level of your Elliott wave apprenticeship. And then this is clearly a nice zigzag 3-wave move that took around the same time as it did. You can see the symmetry here. It's same time. It took for you to come up. It took for you to go down. That's the beauty of impulsive price action. So you'll go up in the same time that it takes you to go up. The same time you'll go down, but a lot less than you go up, but it'll take the same amount of time. And then you just repeat that. That's what makes it impulsive. That's what makes the gains in a bull run or in a bear market, right? Or the losses in the bear market so stark. Because you're going up impulsively and down correctively, but down correctively only a portion of what you were doing impulsively in the same amount of time. So that to me in Ethereum Classic Bitcoin is clear. That's impulsive. What you should expect is your typical target, right, for a wave 3, which is taking wave 1. This is so clear. There's no ambiguity in this whatsoever. You can even see very clearly. Remember, we talked about triangles, and we know, based on your Elliott wave theory, you can't see any triangles in wave 2. Triangles never occur in wave 2. That's a rule. Triangles, you can only see A, B, C, D, E triangles. And this, remember, we talked about the two types, or there's 3 types of triangles, actually. So there's the barrier triangle. It depends how you want to define. But, you have barrier triangles, and you have these regular triangles with no barrier. Okay, this is clearly the latter. A, B, C, D, E. And then you popped up for wave 5. You see that triangle? That is a quintessential wave 4 move. So you got your 5 waves up, you got your 3 waves down, projecting wave 3 of ETH BTC, and this really, again, it doesn't matter what you're looking at. I never look at these BTC charts because I don't care for them. But if I were, I would see the same things. I reach the same conclusions. This is the power of truth. It doesn't matter how you look at it, you get the same conclusion. So 5 waves up, 3 waves down, projection of wave 3, balance of probability. Obviously, you could always get concerted price action to that 1, but it doesn't look like we would, right? Be forming some kind of leading diagonal. Looks like rather we'd be targeting between the 1618 and 2 Fibonacci extensions. So do expect something like this, complex, and then continuation for wave 5. So again, these BTC charts are showing Bitcoin's about to get crushed. So that corroborates our read on Bitcoin dominance going down, right? Because Bitcoin dominance can't go down if it's getting beat by every other asset out there, right? And this is what you're seeing in Ethereum Classic BTC. Yep. So I hope that answers your question, NB. So NB says, thanks, as I'm seeing this correlation in alts that did not surpass or reach price discovery in spring 2021. We're looking at a few of them. Great education. I'm happy to help. So yeah, that's pretty much it. I do expect a move out of this region. Let's go back into the smaller time frames. And this, again, can't stress enough, a move up and out of this region is confirmation of this thesis, this theory that the bull market started on October 13th, right? If you get a move up and out of here or anywhere in this region, that's confirmation that this is bullish price action. There's no ways about, or there's no two ways about that. And yeah, that applies for pretty much the rest of the market. Now, if you get a move continuing down, that just means, like RSR, this was a corrective price sequence, right? Doesn't completely nullify the bullish case, but it doesn't necessarily mean that you're next going to continue into impulse, right? You could, or you can continue, printing corrective waves. But if you bounce anywhere in the golden mean, if you bounce anywhere in this region right here, whoops, if you bounce anywhere in this region right here, between the 382 and the 618, do expect continuation. And, you know, this is quintessential wave 2 behavior, right? Sharp zigzag down between the 0.5 and the 618. Obviously, anywhere between 382 and 618 is acceptable, theoretically, right? Mathematically. But anywhere in this region, continuation to the upside, that's confirmed bullish price action, because you do not get that in corrective price action. Nowhere in any correction do you get 5 waves up, 3 waves down, 5 waves up. That is a particular, that is sort of limited to bullish price action. Okay? So quick last look at the DXY, and then we're going to sign off. I know a better way to do this right here. Okay, so DXY is still playing games, but at the end of the day, what we want to see is a rejection below the phi ratio of this initial break of structure here. So as long as we get a rejection anywhere beyond or below this phi ratio right here, we're good. And that confirms this as some sort of pivot. And that move is going to really bring out the bulls in crypto and in the stock market, which we should actually look at really quickly because it's a thing. Yeah, Great British Pound is still tanking compared to USD. I haven't actually been looking at that. But I've definitely heard. What did I want to do? Yes, I wanted to look at, what did I just say? How can I forget? I just said, what, am I getting old? What the hell did I just say? Yes, I wanted to look at the, S&P. Okay, look, wow. Looks like something already started. It's not much. 10% is not much. That's nothing. Because when the bull market starts, it's really going to be stronger than that. But it's something. But it's not really. S&P. Okay, what's going on in S&P? We should theoretically see the same things. Okay? If the bull market started, given what we've seen in the DXY, then we should also see the same thing in the S&P. And what do we have here? All this AB basing, 2 degrees of AB basing, or purported 2 degrees of AB basing, leading into this, what should be a fully impulsive move. No AB basing, no base of any sort, just quick and sort of pure impulsive price action, okay? And what I like about this is this very clear ending diagonal, right, which you see only in wave 5 of a move. So you get 3, 3, 3, 3, 3, okay? So you get your converging triangle. Could have drawn that a little better, okay? And your subsequent zigzag to between the 0.5 and the 618 for wave 2, okay? So again, kind of the same thing. If you look at the S&P, you're trading the S&P. What you're getting in the S&P right now is what you're seeing in Bitcoin, what you're seeing in most cryptocurrency projects. You got your wave, your 3-wave move that corrected this 5-wave sequence. That 3-wave move took about the same time as the 5-wave sequence, so that satisfied the rules in time, and it satisfies the rules in price as long as the 0.618, this phi ratio, is maintained. If this bounces, then your bull run, your impulsive price action in SPX is confirmed. That simple. There's no two ways about it. If you continue to the upside here and you break these highs and you continue impulsively, then that's it. It's just 5 waves. Just expect it to keep going up and up and up, retracing intermittently, right, intra-wave, but continue to go up until it reaches a macro top. So that's what I wanted to say with the SPX. Again, the analysis is simple in that it's a kind of a universal thing with few exceptions, right? a lot of times people want to say, oh, but look at this, but look at that, but look at that. If it's true and the analysis holds weight, it should consistently be observable throughout currency markets, given that you don't have 1,000,001 underlying assets. The DXY is one, the dollar is one thing that is basically supporting most of the world's economies and most of these risk-on assets. So it makes sense, right, that everything kind of reacts to the dollar in the same way, right? Bitcoin, SPX, NASDAQ, doesn't matter what you look at. Should be few exceptions. Yeah, again, MB says no new higher high set on the DXY this month either. It's a matter of time. Absolutely, absolutely. So yeah, that's pretty much it for me, guys. Hope this was helpful. Hope this was useful. Like, share, and subscribe. And I will see you guys tomorrow. Tomorrow typically is a pre-recorded kind of hit because it's a Saturday. I'm just hanging out with my son. So I'm not going to spend any time. And also, remember, the DXY is closed from 5 p.m. Eastern Standard Time on Friday to Sunday. So typically, there's not too much that happens differently on Saturdays. Usually, it's a continuation of whatever trend was set from Friday. So yeah, tomorrow I'll just put in that pre-recorded video, and then Sunday, as usual, I'll get on at the open of the DXY to live stream once again. Again, thanks for joining. Take care. Hope you have a great weekend. Hope you have a nice Friday. And yeah, that's it. Bye.